2025 has started with a bit of a kind of dampener after such a strong 2024. And I think from our perspective, I think certainly we still see that equities versus bonds, we still prefer equities. We still think that the US AI story will still kind of continue into 2025. But I think it's just maybe adjusting slightly to the narrative about the Fed and rates and where we're going to actually see them play out. And I think certainly it looks like we're going to see less rate cuts coming through in 2025. And it's maybe just adjusting to that and buying into the dips.
Is the disappointment from a lot of investors about not having lower rates, is that tempered by the fact actually that it seems that a lot of the economies, and not all of them, actually will perform better than previously expected? I mean, the notable kind of front runner here is the United States as well. And actually people will say, OK, we may not get the rate cuts we want, but we are going to get growth instead.
Yeah, exactly. And I think it's actually good news that we're not having to potentially go for more rate cuts. And I think the US economy looks stronger, the dollar looks stronger. And certainly from an investor's perspective, the outlook for the US looks better. The soft landing narrative is playing out. So I think it's just that this has been a good opportunity. I think there's been a bit of profit taking, and certainly for investors, it's a better entry point than it maybe was a few weeks ago. So I think, yeah, you're right. Longer term, it looks a better outlook. And certainly it's not a case where we're having to see rates being cut as a panic, but actually if we can have rates higher, it does actually support the fact that the economy is stronger.
And yet an hour ago, I had Peter Toogood from Embark Group. He was pretty gloomy, I've got to be honest, though. He was really concerned about the vast amount of issuance out there, the vast amount of leverage, and just saying that we are building up a credit bubble. I'm sure you're cognizant of those concerns, but how do you value them, those concerns?
These concerns are merited because we've seen that, post-pandemic, there's been stimulus into the economy, which has led to a lot of growth. But I think fundamentally the AI story is something that is tangible, and it is a story of growth. And I think certainly it's there where we're going to see this is a huge change. This is going to be a change in the way we do things. So certainly it is, given we've got a lot of companies that are issuing really strong results, corporate news is good. So I think fundamentally the markets are supported by this and the fact that we are seeing corporates being healthy and growing.